Alrighty, let's go ahead and get started. Welcome everyone to the HUBB Live Trading Room. Great to be back with you all during this trading day and during trading hours. First and foremost, as always, we do need to cover our disclosure disclaimer agreement. The main thing to take away from this is that we are not licensed investment advisors in the United States, so nothing is to be taken as personal investment advice. This is always available on our website to be read in full detail at your leisure. Otherwise, please feel free to take a screenshot of it now if you like, but that's the main point to take away. Other than that, I know we have lots of exciting topics to get into for this session. So without further ado, Rob, you out there?
I am Zach. Happy Wednesday to you. I know you're a little bit under the weather today, so appreciate you being here and apologize to everybody for the late start. Technical difficulties are always fun to deal with. I don't know what we did before technology, but now when we have a hiccup, it disrupts everything. But let's go ahead and start taking a look at where we are in the market. We're moving to the upside today. Really not a whole lot of news other than President Trump sent out a tweet at 2 a.m. Everybody's all over what was he doing up at 2 a.m. And they say, well, he often stays up late and gets up early because he's working. But he's frustrated with China and their apparent lack of cooperation in making a deal. But we're getting one side of the story, but that's really all the news, and the market seems to be shaking that off. It's almost like we're becoming tariff immune now without any sort of significant move. But the key here is that when we look at this triangle, we're breaking to the upside. I showed you during the Zig-Zag mastery class. We talked about it in the insiders meeting. We talked about it yesterday at EWO Live. There's 3 zigzag patterns within this big zigzag, well, including that one. There's 2 complex zigzags that are going through here. All of them are saying that we're likely to go test this wave 5 high from February. Let's hope that that's what happens. And then we'll see where things go from there. It's going to be a different animal once we get there. Can we break through that? Can we go to all-time highs? Or is that going to be too much of a ceiling and then we head back down? But we are, at least at this point in time, getting that follow-through day. So that's the key thing that I wanted to focus on. Remember, yesterday's breakout means nothing. You have to have a follow-through or confirmation day. We've gone through this so many times. I'm sure you've heard it in nauseum, but that's what we need. So if we can hold this into the close with a higher close today, that gives us the follow-through day with the breakout of the triangle. Even if we were to back up a little bit, it still counts as a potential break to the upside from that triangle. And as I talked about yesterday, the width of this triangle pretty much brings us right to that high, which again would be some resistance and perhaps go sideways there for a while. See how that all plays out. Let's get to the bond market because that's been the issue. Is the bond market not cooperating? It has been a bit yesterday. Now, yesterday we closed near the low of the day, so we were having a nice little up day in prices and therefore down in yields. But then we closed near the low. That's not the kind of bar that you want to see, or candle if you're a candlestick fan. But for now, today we're back above the 10-day moving average. We're trying to move higher. We're just filling this gap right here. So we need to make sure that that's not all we're doing, is just filling this gap and then head back down. We kind of came down and filled that one, as you can see on Friday or Monday. Just a little bit of backing and filling. That's the definition of it. Backing and filling means you move back, you fill a gap. It's generally a sideways type move, and that's what's occurring right now. It's just this sideways kind of channeling stuff going on. But at least we're not having a big move down in prices and therefore up in rates right now. So if we can get the bond market to calm down, that should provide enough ammunition. I think the market is looking ahead. The market always looks ahead, normally 6 to 9 months ahead, to the fact that we are going to get a rate cut at some point in time. I think a lot of people are frustrated that we haven't gotten a cut sooner, but there's not really anybody talking about any sort of a potential rate hike, which a few months ago, we're like, gosh, do we need to switch from a rate cut to a rate hike? That's all gone by the wayside now. And so far, so good with the bond market. And then the dollar, which was, as you can see, up yesterday, is back down today. And as long as, again, we stay around this 100 level in this channel, even if we come down and test this April low, that would be okay. I just don't want to see us break that low. We don't want to lose the dollar, but the dollar staying down here is actually constructive for the metals, for cryptos, for everything. To keep it in the lower end of this range. We still have to respect that this is a qualified, not confirmed, but qualified five wave to the downside pattern with that wave four right there, just under the 38.2% fib level. So let's hope that that doesn't get violated, but that the wave three low doesn't get violated either. So I'm being really picky on where we want the dollar to be, but so far so good on the fact that it's hanging in during that area. Let's take a quick look at the metals, and then we'll move over into the AI stuff, which is why you're here for the Hub Live trading room. You can see that gold is kind of testing that breakout. We didn't have a follow through day. Talked about this on Monday when we had this upward move. Were we going to get a follow through day on Tuesday? And we didn't. And then we're just kind of hanging around, flat line slightly higher on GLD right now. Perhaps we're just getting one of those breakouts in a test and then it turns and moves back up. But so far, we cannot confirm an upside breakout on GLD. Even though it appears that's what's happening, until we get confirmation, we have to let that go. And then silver, which outperformed gold on Monday. And, you know, I've been talking about that for quite some time. Is silver actually going to get its act together and catch up to where gold's been? Certainly appeared that way on Monday. Was down yesterday, but still had a better day than gold did, and then not much going on with silver today. So technically no follow-through day on that breakout either, but that one was a real significant one. Maybe we need to go sideways a little bit here and let the 10-day moving average catch up before we take off and go higher from there. If we look at BITB for Bitcoin, we're hanging around this upper end, and I hope, or for all of you that are bullish on Bitcoin, you want this just to be a test here. We broke above that resistance from December and January, came back down. We're testing it now. The problem is we are at this current moment underneath the 10-day moving average, which we don't want. We want back above that. So the next day or two will be very important with Bitcoin. Ethereum's been doing a little bit better, not a whole lot, but slightly better. I've opined that perhaps moving forward from here, we could have a period of time. I don't think it'll be the long term, but a period of time where Ethereum could outperform Bitcoin if we get a renewed upward move. So far, we're just consolidating right here around that 19 level with this congestion that we had back from February for the entire month of February. If we can bust that, if we can get somehow above 20, then I think Ethereum, at least on the HW, will go up to 25, which would be one heck of a nice move. But it's got to get there first, and first steps first, and that's the 20 level. Looking at energy, with all the chatter this week on CNBC about the Alaska pipeline and opening up new dormant pipelines and all kinds of stuff, it is holding natural gas right at the point of this triangle, but none of that has been able to yield another breakout like we had back in the beginning of the year, where we had this big run in January and February and into early March when everybody started realizing that all the data centers would be using natural gas. So still waiting to see if we get a breakout to the upside on that triangle. It is a five wave to the downside pattern, but remember that with triangles, they trump everything. They can break either direction no matter what the LA wave pattern is. And then when we look at USO, it looks like we're trying to make an upside breakout here. Looks like we have a confirmed move to the upside out of this triangle. So let's see if that continues to move higher. We might actually send out something in the volatility portfolio today on this, since I just didn't like the option pricing for a strangle. Decided to wait and see which direction it breaks out and then go from there. So let's move into the AI stuff. And there isn't a whole lot to talk about today. You can see the results. The highest score is ANAB. Um, Nothing that we would be interested in because it's a biotech. You can see the craziness that occurs here. Well, look at where we opened and where we've gone down, and just especially with a lower score, not going to be interested. The one that gives a little bit of potential interest is this um, TBPH, but it's also in the biopharma area. Normally, with a low score like that, we would want to fade that. So instead of going bullish, we would look bearish down to the downside. But who knows? I'd have to go back and research what the news was that created this big spike here. And you just never know what's going to come out of those pharma, drug, exactly those kind of stocks. Very difficult. And we have GSK, which I will show you here in just a moment from yesterday, which was a really high score and a really good setup. Doesn't guarantee anything, but it sure is a good setup. But we'll get to that in a moment. On the bearish side, nothing. On the wave 5 bullish side, the highest score we have is CBT. We're still doing the research on what the fade trade best turns out to be on these wave 5 trades. And perhaps it's just going sideways. That's the way I'm leaning. I know that the natural thought would be, okay, well, if it's supposed to be a wave 5 trade, meaning that we're moving from the wave 5 back to the previous 4, and you're fading it, that would normally mean you go the opposite way, which would mean you would expect this wave 5 to continue lower. But there haven't been as many of those results as you might think on the low scores. More often, it just kind of moves into more of a time strategy type trade where it goes sideways. Anyway, once we have enough data that we feel confident, we'll release that. I'm doing my research. The data scientists are doing their research. Their obviously priority was to get the actual original search out, and then we can work on what happens with the fade trade. Looking at the sideways, nothing. So there's no results there today. So again, pretty quick on not a whole lot to talk about in the AI space. So let's go and take a look at yesterday's list, and I'll show you Glaxo, which was a really good setup, and perhaps we can see that one come to fruition. You look here, and there's GSK, and we waited a day because it was a little too vertical. You always have the danger of that, as I talk about a lot, because the AI really catches these wave 3 momentum runs, and sometimes that run can continue. That one just looked a little too vertical, a little too fast, a little too far separation. So we waited a day and we got a much better entry yesterday, and it's having a good day today. We do have to note that at this point, we've just filled that gap. So we do want to see some follow through and continuation here. But look at this zigzag pattern. Not only do we have an 86% score here, which is quite high for the AI results, but the zigzag pattern is beautiful. We've got a B wave, 50% correction, and then that yields the 100% extension. We'll be doing lesson 2 on the Zig-Zag Masterclass tonight, and we're going to get into more of this kind of stuff as we go through the minutia of zigzags. Last week we gave you a brief overview of it if you hadn't seen that before. But the fact that the C wave and the AI target are the exact same spot is encouraging. Again, nothing's 100%. There's no guarantee it's going to work, but so far so good. And then we look at the DMI, and there's good and bad here. The positive is the ADX is moving up nicely. It's above 20 and now it's broken above 25. So even if you like the more conservative view on the ADX of getting above 25, as you know, I like 20. If we're between the two directional indicators, moved above the negative, there's good separation. I like to see that ADX once it breaks above 20. There have been very few times, oftentimes it'll go up and hit 20 and roll over, but not that many times does it break above 20 and go to 25 and then roll over. We did here, but we made it all the way up to 35 plus first before it rolled over. So that's still plenty of move. Another 10 points on the ADX, and we'll probably be at that AI target by then. The separation is huge, so a little bit of give back or a little closure between the two directional indicators is kind of normal here. The positive is we seem to have stopped the downward move today, and we've also had the negative directional indicator tick down as well. So two different signals there that just that little quick blip down from yesterday's trade seems to have abated already. So it's a really good setup, and we'll see how things play out. It's the ideal setup, the one you want to see most often. But as I mentioned, that still doesn't guarantee that it's going to work. So you've heard the disclaimer enough. Nothing's guaranteed, but we wish we'd have a whole lot more setups like this. That would be great. So love to take advantage of them when we're there. And then if you wonder why do we do anything with the EUR, which is we talked about this last week where everything was international. All the stuff seemed to be on international stocks. And this one does look pretty interesting. I wanted to see that follow through and get that ADX continuing to tick up and a little more separation between the directional indicators, and we're getting that today. So the negative is it doesn't have the zigzag in it like GSK does. It's just a big impulse move. And when you see that, as you know, with these AI searches, sometimes they just run right to their target, and we get the quick ins and quick outs, 1 to 3 days. And then other times they take their time. And this could be a scenario where that occurs, where we run up here and then we get a little bit of a pullback and then it goes up. I'm not saying it's going to do that because the DMI is starting to look better and better. But I like it better when there is a zigzag because we know we've had that corrective phase. But we could also run all the way up to this target and then pull back. So that's where the indecision comes in if you're in a mono wave 3, where that's kind of taken away if you've already got a zigzag in there. Still an opportunity for a complex C wave on the zigzag, but at least you know one corrective move has occurred already. Now let's take a look at the CCI here, and that looks constructive today as well. Notice how yesterday we were moving down, and we had a down day yesterday, so we didn't get the follow through, but now it looks to be creeping up, and we've got this little bit of a move here, so be checking the options after we finish the session, and perhaps you see something come out here. It's 74, so it's not quite 75, but there's enough interesting here that we may want to take advantage of that right after the session's over. So we'll have to see how that plays out. Notice SLV here, which could be really interesting. It's only a 71 score, but with that breakout to the upside, and we already have a position on SLV in the volatility portfolio. So I don't know that we would add anything or do anything else here on silver. 71 score certainly is interesting with an upside breakout. If we look at the ADX, you can see that back here in the triangle, we had a very low ADX, and as normally happens, the low ADX is telling you you're going to get a breakout, and we got it. But look where the ADX is right now. We're not quite to 20. We may get there at the end of the day today, maybe not. So we might wait another day and then do something from a directional standpoint on silver, even though it's only a 71% score. and not the 75 that we normally like. As you know, in the past, I have sent out alerts with scores of 70 or above when the setup was really, really good. But we don't want to go below that, and 75 is our preferred level. But just going through the rules of the way I look at these, a score of 70 or better, and I'm still interested. So obviously, when you look at that setup there on silver, with everything else we've been talking about with the metals, the potential to play catch up and stuff, I think is quite interesting. And then this is a flashback to last week, another international ETF. Maybe the IEUR is better. We're going to have to look at the options and see where the liquidity is on those. But that's moving up. But look at where this ADX is here. This is a very strong move on this. So international small caps basically is obviously in vogue right now, with the fact that that ADX is above 45 and still going strong. And not only that, normally when the ADX gets that high, you'll see the positive directional indicator tick down just as it was at the end of May. Now it's turning around and going back up. If that somehow gets above the ADX again, that's a very strong move. So there's a couple dollars left to go. So a lot more stuff to talk about yesterday than there was today. So we're doing a 24-hour flashback here with what's going on AI wise so far this week. And again, I'll be looking at those very closely. You might get 2 alerts this afternoon, might not be any. We'll have to do the options analysis and then see. All right, Zach, that pretty much covers off everything I wanted to say. So if there's any questions from anybody, happy to take those, or we can get back to our trading day.
Yeah, sounds like a plan, Rob. At this moment, there's no outstanding questions, so I think everyone might just be internalizing the insightful presentation you gave and excited to get back to see how the rest of the market plays out. So back over to you.
Well, I appreciate the comment, but they may just be bored because there wasn't a lot to talk about today other than stuff that was a day old. But I appreciate the comment. And again, thanks for powering through today. I'm sure everybody appreciates it and hope everybody enjoys the rest of their trading day. We'll see those of you that are in the Zig-Zag Masterclass tonight. Otherwise, we will see you tomorrow evening during the Insiders meeting. So enjoy the rest of your trading day. Take care, everybody.